What's going on, everybody? It's your boy C-Zar, and today we'll be talking about Bitcoin, BTC, USD. It is the 16th day of June, and here we are sitting at $66.4 thousand, roughly 11 hours left in the day. Hit that like button, please, and thank you. Subscribe if you'd like to see more content like this, and let's get into it. Okay, so here we are, moving up from our lows that we had at the very beginning of this month on the 5th day of June there, just below our lows from February 6th. That's kind of interesting, right around the same days. Let's see here, hold on, when was this? This was not around the 5th or 6th. Okay, just seeing if there was some kind of compatibility there, but just between these two lows, right in this same area, you've moved up, and now you are finding resistance at prior areas of support, kind of in the heart of this initial phase before we started our next leg up here. If we look at this from a relative high here, from the 6th of May to the relative low on the 5th of June there, we have directly touched this 382 level, tipped it, and actually found resistance. Now, we're still crowding this area. It is completely possible that we do go up a little bit from here, but I do suspect that from here, we would at least return to the 236, okay, the $64,000 level. And the word that I'm using there, the phrase that I'm using there is at least. At least we will return to 64K. It's completely possible in this environment that we return all the way back down to prices that are below 61K, all the way there at $60,500, or somewhere in between. It doesn't have to be exactly at either of these lines. These lines are ideas. Ideas can be, you know, they can be more excessive, or it can be more excessive than the idea. Reality can be more excessive than the idea. The reality can be a little short. It can fall short of these ideas. Anyways, without getting more tied up in my own words here, let's get into the short-term stuff. Okay, that's the general scope of how I see things going right now. I don't expect that we move up too much more. If we do move up, maybe we get a little bit above 67.2K, but likely we will be working our way down at least to 64K, at least to backtest this prior resistance point for support. If we do, great, we can target the golden ratio, or at least the 0.5 here. That's $70,000 to 74.6K. I just don't believe we're going there right now. We could be. It's possible. I could be wrong. I've been wrong before. I'll be wrong again. But likely from here, with what we're seeing, we'll go down here, or somewhere in between. Okay, 1 hour time frame. Looking at the 1 hour here, we did find direct resistance there at the 382. Coming up, getting a lower high here, looking like you want to move lower. Yeah, the RSI is looking, I mean, the RSI looks strong overall. It really does look strong overall. The stochastics have also been looking strong, but you've gone from getting into the stochastics overbought zone and staying there to now rejecting it. And instead of flipping this green, you're getting a little bit more of a healthy bearish kind of drive here in the histogram for the MACD. It seems, to me at least, that you're going to be moving lower. If we look at this on the 4 hour time frame, the 4 hour RSI is awesome. I mean, it looks really, really good. Lower or higher lows, higher highs. You're in this phenomenally formed trend. Again, maybe we move up a little bit more. We get that bearish divergence where you get a higher high in the price, a lower high in the RSI, but we don't have to see that. It's definitely not something that needs to happen. You are likely at the end of your trend here. Typically, these trends in the RSI end when you've hit the overbought zone, whenever you have something that's nice and established like this. Again, maybe we have one more drive, but just looking at this on the 4 hour, it does look as though we're showing a little bit of weakness here. 3 hours left in this 4 hour candle. Let's see how it closes, but I could definitely see us coming down. The 4 hour MACD has been green for quite some time. We've had a couple of false crosses, which just false red crosses here, which ultimately just provided even more bullish behavior. But you can see that these levels are slowly kind of waning down. Was this higher? It's basically tit for tat, actually. It looks good. The 4 hour MACD really does look good, but again, the price action with the RSI and the stochastics, I could definitely see us coming down a little bit here. If we measure from the low to the high, relatively speaking, low to high here, you're at the 069 level finding resistance. The next stop would be the 382, which is right around 64K, which again, from that overall high that's up there from May 5th to this low down here, right there, that is the 236 level of that fib as well. So 2 points of significance from different fibs at the same price level, $64,000. So we really could be dropping down there, 66.4K. That's not that big of a move. That would provide a higher low overall, and Bitcoin then could continue to move higher depending on what it does next. But at least to 64K. If not 64K, it is completely possible that we drop down lower 62.1 to 61.5 is the golden ratio relative to this fib here. And if we were to go lower, Bitcoin does like it's 786, so 60,789. That's very close to the 069 level from that May 5th to June 5th high to low as well. Anyways, 4-hour time frame looks good, but it's also looking like we're getting to that point where you might expect to find a relative high, and I am suspecting that that's what we're going to see here. So looking at this on the daily time frame, obviously you are at points of prior support here, finding resistance there somewhat. It's not clean, it's a little bit sloppy, but you get the idea, right? Looking at the daily time frame, the RSI is at the 50, perfect area to reject if you're on the daily RSI. Stochastics are at the overbought zone, perfect area to reject as well. The MACD's cross green, which is nice, but overall, again, the kind of idea that I have here is that, you know, this is the low, this is the relative low, not the low of the bear market. A lot of people, there's too many people I think who are quick to call this the low of the bear market, and that we're going to be in a trend that moves us higher over time, even if it's slow like this, or if it's really fast, however it is. Maybe we accumulate first, but then the bear market's over and we continue to move up, however it is that people are painting this picture. I think it's a bit too early to make that call, and I suspect actually that this is just a stopping point, a pit stop, a staging area, kind of like it was last time, and then we'll be going lower. That's my expectation. We very well could see a consolidation range that looks just like this, more or less like this. Maybe instead of higher lows, we do this and we get some lower lows. You know, maybe something like that. But like this in the sense that we move sideways, like this in the sense of time, and then I would think come late July or August, we will be breaking down and seeing lower levels of price at that point in time. This would be our bear market ending finale if my suspicions are correct, which should take us anywhere from 55K to maybe 45K. Maybe we do go below 50K, 44K. You know, there's even targets at 43K. It's completely possible. It's something that I definitely accept. I'm very open with as a possibility. Daily time frame is at points to find resistance. The 4-hour time frame are at points to find resistance as well. Daily RSI bouncing off the oversold area. That's kind of nice. We've seen that dynamic happen before, and then a week later we drop down. So I'm not. Oh wait, this is the weekly RSI. Sorry, not the daily RSI. This was a few months later actually. So yeah, same kind of idea that we're going to be moving sideways, up and down, and then lower as the months come along. The MACD is about to flip red, which I don't think is a positive signal. You know, people are comparing this MACD here, saying that we have bullish divergence. We did have bullish divergence, and it already played out. I don't think that there's any bullish divergence to play off of now on this MACD. You know, if you want to use the MACD, go to the bull market when things were actually bullish, when you were getting higher lows and higher highs. Okay, go to the bull market there and tell me what the red cross did for you there, right? You had a drop, a significant drop here, red cross. You definitely weren't moving up at that point. You're moving sideways, and you did drop over time. You had a couple of significant drops throughout this range as well. During the bull market here, whenever you crossed red, you had a drop there as well. You had a week where you dropped 10%. It's not crazy percentages that you're dropping, but for Bitcoin, 10% is significant these days. You know, it's an over $1 trillion market cap. We look at the bear market, and these drops are even more extreme. Whenever you flip red in the bear market, I mean, you saw a significant drop over the weeks to come. Here, whenever you flipped red, you saw a significant drop over the weeks to come. And then we flipped green here. We had a little green flip here in the bear market, and then whenever we flipped red again, that was the biggest leg of the bear market, was when we flipped red after flipping green. Here we flipped green, and we didn't flip red again, and we still went lower. Right, there was this long accumulative phase at the end of the bear market, and I don't think we've even seen that yet. I don't think that any of this is part of that accumulative phase. I would assume that when we go lower, we will likely form our long accumulative phase, and it could go into late 2026. It might even go into 2027 before we see any type of recovery that suggests that we're in a bull market again. It's going to be some long, boring time, and boring, emphasis on the boring. I really do believe it's going to be boring as far as the price action goes, as far as the sentiment goes. It's not going to be manic panic selling. It's not going to be manic FOMO buying. It's going to be very boring. That's my expectation. But for right now, a little bit of boring time. We'll probably move sideways until July, late July, or sometime in August, and then break down. I do suspect that we will see a consolidation phase that lasts somewhat as long as this part here, and then we drop lower overall to this anywhere from 54, basically 55K, to something that is just below 49K. And there are acceptable targets at this 45 to 43K area as well. It's something that we should address. For the longest time, I've been saying that we'd stop somewhere in here, 55 to 52.4K. It's completely possible that we do stop there. It is completely possible that we do. But recently I've seen some stuff that does suggest that we could go perhaps a little bit below 50K. I'm open to it. I don't think it matters too much if we go down that low. What matters is that we capitulate the markets and that people freak out. Anybody who's shaky sells. Anybody who wants to step in to buy with some solid capital and solid conviction, primarily, they buy. You shake out the weak hands, you promote the strong hands, good positions to get in and good get out. Capitulation is what's necessary. And I just don't think we have that yet. So I'll see you guys on the next one. It's the 16th day of June today. I'll see you tomorrow, the 17th. Hit that like button, subscribe. Thank you all. Take care. Bye-bye.